Hello everyone, welcome to today's US Open live webinar. I'm your host Nikos Zabouras, Senior Market Specialist at FXEM. It is today Thursday, August the 24th, 10 minutes before Wall Street opens as usual. Nvidia is in the spotlight today. It reported blowout quarterly results as it continues to ride the artificial intelligence wave, helping also US equities. The latest PMIs from Eurozone and the UK were rather poor, and markets now brace for the Jackson Hole Symposium, where both President Lagarde of the ECB and Chair Powell of the Fed are expected to deliver speeches on Friday. That's pretty much what we will be talking about today. Before, however, we begin, as always, please read carefully through the risk warnings and the disclaimers, and then we will get started. Also, please bear in mind as you read those disclaimers that anything discussed in this session does not constitute investment advice and should not be construed as such. Let's give it a few more seconds and then we will begin. Okay, let's get the ball rolling. We're going to start off with Euro USD. Then we'll move over to the British pound versus the USD and the fall that we are seeing as I would say the rate advantage of the euro and the GBP versus the US dollar erodes after the recent PMIs and other developments over the recent weeks. And then we will go to the Nasdaq and talk about the technical outlook and of course a little bit about Nvidia's results. So on the Euro USD front, the pair is losing ground over the past few weeks as Euro's rate advantage, as I said, has withered after the ECB opened the door to a September pause, and at the same time, the Fed's higher for longer narrative has been gaining traction. Of course, this is due to the fact that the European economy is sputtering. Its main engine is economic engine is Germany, and is in a technical recession. And yesterday's PMIs for both Eurozone and Germany actually highlighted those difficulties that were quite poor and highlighted the difficulties that the European economy is facing. And that does create some apprehension probably around further tightening by the ECB. Now, this decline that we're seeing over the past few weeks brings Euro USD at a difficult spot. It tests the 200 days EMA, exponential moving average, the blue line that you see here at around 1.08, and this creates a risk for further losses towards 1.0634, 1.0611, although perhaps fresh catalyst would be needed for a test of those levels. On the other hand, this pivotal DMA 200 has contained the pullback this year multiple times, and we can better see that on the daily chart. So if we go back, you see here, it's being tested now, but it has been testing multiple times earlier in the year. But the pair has remained throughout 2023 above that exponential moving average. So if a similar outcome is to happen again, the common currency could get the chance to enter back into the cloud, which starts at around 1.095, 1.096. But the truth is that it does not inspire confidence for further advance and exiting it on the other side, on the upside, which tops out at around 1.120, I would say. Of course, the next leg of the move will probably be determined by the Jackson Hole Symposium, which starts today, and we expect speeches to be delivered from both Fed Chair Powell and the ECB President Lagarde. Now let's go to GBP USD, which finds itself in a similar position. Of course, the pair had a volatile day yesterday as well due to the bad UK PMIs, which initially sent it lower. Once again, similarly, this saw the tough spot of where the UK economy is and raised the bar for more tightening by the Bank of England. The more hikes it produces, higher the chances are that it will actually break something in the economy and trigger a mortgage crisis as well. Of course, subsequent US PMIs were also bad, but the economy in the US is in a much better state and the labor market is hot, so there's definitely room for more tightening there. Again, this is another case where we're seeing the differential, the policy differential shifting from GBP positive, shifting towards USD positive. So the pair now is vulnerable again to further losses towards the 200 days EMA at around 1.248. But we are cautious around further losses towards 1.2307. On the other hand, it's hard to see how the BOE can actually hold back given high inflation and wages. Again, we've talked a lot about that. They do have a non-committal stance, and there are reasons for apprehension, but it's hard to envision them stopping at this stage. So we can definitely see a recovery effort, but once again, the cloud can suppress such moves, which tops at around 1.2920. And now let's go to the main event. Once again, of course, here we will be expecting the Jackson Hole Symposium. And now let's move to, let's say, the main course, which is NVIDIA and the US Tech Heavy Index. Now, the chip designer posted blowout quarter on Wednesday after US markets closed. Of course, there is, you can find more on YouTube around that. I have already posted a video. Record revenue and strong guidance driven by AI demand. Execs also dispelled demand supply concerns. So there is an issue that, okay, NVIDIA is enabling and pushing forward this AI revolution, but there are supply concerns in whether it can actually produce, it doesn't manufacture it itself, but its suppliers produce the chips needed. It said supply will ramp up and demand remains very strong. So that was good to hear for markets. And of course, it also offers strong forward guidance, as we said. Its stock has more than tripled in the first 7 months of the year, and markets reacted positively to yesterday's results and is expected to move to new record highs. Of course, we have a minute still before the US Open. Now, of course, NAS 100 has rallied this year because of this AI boom, largely because of this AI boom, and reacted positively to NVIDIA's results. After 3 losing weeks, it regains control and can push for fresh 2023 highs, which are located at 15,946. But of course, the record ones at 16,770 are still distant. On the other hand, NAS 100 shows trades with caution today at the edge of the daily Ichimoku cloud. Once again, this is an important technical part at this stage. And the RSI, as you can see on the bottom part of the chart, the relative strength index is at overbought territory. So after this 3-week losing streak, it is still in a precarious position, and a return back towards this support region here at around 14.3 would not be surprising, but we struggle to see sustained weakness under current conditions, because once again, even with this shifting expectations around the Fed towards more hawkish side, if this AI revolution can continue, it can continue to feed the index higher. Of course, once again, the Jackson Hole Symposium here could be crucial. So let's round things off with what is ahead. Not much in terms of data for the rest of the week, but as we said, markets brace for Friday speeches by the heads of the Fed and the ECB, hoping for insights as to their intention amidst, of course, highly uncertain monetary outlook. Ms. Lagarde, as we said, has opened the door to a pause. Chair Powell has also kept all options on the table, but the higher for longer narrative is gaining traction over recent weeks. Now, next week starts off slow as well, but heats up in the second half with critical economic releases. That's pretty much it from me for today. We will talk again on Tuesday at our usual slot, 10 minutes before Wall Street opens. Thank you for joining me.